Good morning, good afternoon, good evening, wherever you're watching this video from. Welcome to Apex Synthetics. So today is the continuation of what we had in our last video, what I discussed in our last video, advanced market structure. So today I'm going to show you guys the advanced market structure on the chart for simple understanding. So last class I discussed about the advanced market structure for a sell and also for a buy, and I also made mention of the three things you are to look for in the advanced market structure. So let us dive into the chart and check it out. So right here, like I said, the first thing I look for is my sweep of liquidity, and right here I have seen my sweep of liquidity. Here is my sweep of liquidity. Firstly, the market is a downtrend, so I am looking for a sell, which you can see the market is a downtrend, so I'm looking for a sell, and this is volatility 100s. So I mark out my first sweep of liquidity, and the second thing I look out for is my break or my transactional liquidity, and the third thing I now look for is my structural liquidity. And so the last thing I will now look for is my POI. I will now mark out my POI. I mark out my POI up here. So, and as you can see guys, market reversed and tapped into it. That is it. So after marking all this, after marking my sweep of liquidity, mark out my break on my transactional liquidity, and I now mark out my structural liquidity. You see the market went down a little, gave some lows and some highs, and eventually reversed. It reversed back into my POI, and you can see it tapped my POI, and actually it smashed my TP. The market smashed my TP, which we have seen. So that setup actually played out. So that's the strategy I use, guys. That's it. And also, here is another example. After this has smashed my TP, I also paid attention to another thing as well. I saw another sweep here. I saw my sweep. Here is my sweep of liquidity, and next here is my transactional liquidity or my break, my first break on my transactional liquidity, and the next thing is my structural liquidity. And I marked out my POI in this last bullish candle here, this last bullish candle before the bearish momentum to the downside. And so guys, you can see after marking it out, the market went down a little. The market kept selling, continued selling until it later did what? It later reversed. Yes, it later reversed into my POI, which we have seen right here. It reversed, tapped into my POI. So that structure attracted the market. The market was attracted to my POI, and you can see it smashed my TP. My TP got smashed yesterday. Yeah, this is my TP. The recent swing low is always my TP. So you can see the market smashed my TP. So guys, that is what I do. That's what I do. You mark out your first thing you should look for, guys, is your sweep of liquidity. That's the first thing. After marking out your sweep of liquidity, you now mark out your first break. Yeah, your first break or your transactional liquidity, and then you now mark out your structural liquidity. Mark out your structural liquidity. After marking those things out, you now go back and mark your POI. That is where you're expecting the market to reverse back to for you to get your entry. So guys, that is how you use the advanced market structure. That's how you use the advanced market structure. So if you're advanced market structure trader, these are the things you should look out for. These are the things that you should mark out. And so let's check out another example for the buy. Let's look for an advanced market structure for a buy. So this is 75s. This volatility 75s. So you can see the market is an uptrend. So let me check if I'm going to see a buy. Okay, right here, this is my advanced market structure. I have seen something First, like I said, sweep of liquidity. That's the first thing I look out for. After that, I now look out for my break to the upside, or my transactional liquidity. The first break to the top side, my transactional liquidity. And I have seen here my structural liquidity, the first low here that was formed. That's my structural liquidity. And lastly, I mark out my POI. This last bearish candle, I mark out my POI. And as you can see, guys, the market reversed and tapped into my POI. Very clear. You see that the market reversed. After the market reversed, it tapped into my POI. And this here is my TP. This swing high is where I marked my TP. As you can see, my TP got smashed. And so here is another example again. Yeah, this trade, I marked out this trade and it went well. So the first thing I looked out for was my sweep of liquidity. After my sweep of liquidity, mark out my break, my first break, or you can call it transactional liquidity. And the next thing I now looked out for is my structural liquidity. And I mark out my POI right here. This is my POI. I mark out my POI. Mark out my POI, this last bearish candle right here. This last bearish candle here before the pull to the upside. So that's my POI. As you can see, guys, market tested, reversed, and entered into my POI. Even gave a double bottom. Yeah, tapped my POI, and here was my swing high. This swing high here was marked as my take profit. As you can see, guys, it smashed my take profit. So guys, that is how to use the advanced market structure. You look for your sweep. The first thing you should look for is your sweep of liquidity. Second thing, your transactional liquidity. Third thing, your structural liquidity, before you now mark out your POI. Then wait for the market to reverse into that POI, give you a confirmation, and then you take the trade, which is going to go back and smash your POI. So guys, I hope that this has really helped you guys. And so if this has helped you guys, really, if it has really helped you and you appreciate what you're watching, follow the channel. Make sure to subscribe to my channel so that you get more videos. You're going to watch more videos, and also make sure to follow up for other synthetic trading knowledge as well. Good luck, guys.